Hi, I am B.Renuga. I am working as an assistant professor in Dr. S.N.S. Radhalakshmi College of Arts and Science. I belong to Business Administration Department. Today we are going to discuss about the case study on national income. Okay, let's start with this topic. The case study it's relate to the national income. How it is will be making the comprehensive measure of the performance under the economic concept. Okay, under this important topic we have to discuss the main important issue under this national income is nothing but the process of production will be take place and also the factor incomes are paid to factors of production for the factor services will be making the way of income flow and corresponding to the output flow. Okay, the factors of production will be spent the income on purchase of either the goods or services by making consumption expenditure. Okay, under this important topic the production or the making the prices will be increasing the production give rise to the income and also the making the income results in expenditure and also the which in turn generates the income will be making the way of activity in the three different methods. Okay, what are the three methods to how we are going to making the measure under the national income is nothing but the value added method and income level and also the aggregate demand method. Okay, so these are the main important three methods when we are going to calculate the national income. So under this issue we have to make the some way of activities will be discussing in the previous videos. Okay, that intermediate goods include all those output and also the value is making the meshed with the value of the activities should be making the value of final goods. Say for example we are taking the some intermediate good as it's the value is merged with the value of the activities will be involving the some. Suppose if you are taking the machinery purchased. Okay, under this making we are making the bread packets. Okay, it is an important intermediate goods as is the value will not be included in the some incredible consumption. Okay, so that imports are not the separately included and also we have to make the consumption is the very important factor will be given in the imports are not included in the activities making in the way of increasing the some particular raw materials we are supposed to using it. Okay, the imports are not the separately we are including it. Okay, the imports are not making and also the already it is included in the value of the intermediate consumption. Okay, however the important domestic purchases are specifically we have to mention, then imports will also be included. Okay, let's talking about that intermediate consumption. Okay, suppose we are measuring the intermediate consumption is nothing but we have to use some formula how we are going to measure the value of output. Okay, so this is a main important issue under this case study. We have to enter the sold prices and also the accounting year, not we are calculating in the financial year, we have to take the accounting year that is the value of output that is equal to sales. Okay, so the entire output is not sold in the accounting year, automatically that unsold stock. Okay, so that is added to the value of sales, it should be making in the unsold stock is the excess of the closing stock over the opening stock and is termed as a change in stock. Okay, so the value of output is equal to sales plus change in the stock. Okay, the change in stock is nothing but the closing stock minus opening stock. Okay, so the how we are going to calculate the closing stock is nothing but the way of measuring the stock when we are using in the production part. Okay, so the final product. Okay, that is the closing stock. Opening stock is nothing but before we are producing the activity or any goods of the item when we are receiving the raw material, that stock will be calculated under this method. So these are the some issues under this activity and also moreover to calculate the value of output. Okay, so the value of output is nothing but the quantity in the price plus changes in the some stock. We have to make it in the some activities will be pair of the shoes annually we have to sell them. These are the way you have to using it. We are going to calculate the value of output. So the value of output is nothing but is equal to quantity in the price multiple with the price plus change in some stock.